Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. So let's take a look again on the gold market. As you understand, we're now standing in a different world, and actually, as we called in our weekly report in recent week and 2-3 weeks ago, we said this is stand for a long time and buy gold. In the recent weekly report, we said just buy gold, not only for speculation, but only just mostly to save your assets, save your money that you have in general. So not necessary to use the leverage. You could buy gold, for instance, buying the CFDs or futures contracts without the leverage. So 1-2 contracts that equals to your amount of the assets. It's also not bad decision. So in the current environment, it might be really useful. So speaking on the recent performance, I do not see a lot of things to comment. Actually, you can see based on recent events, market has jumped up, and we said usually tight consolidation below the strong or important top is the sign of the common breakout, and that has happened. So currently we stand here, but at the same time, events were and are actually currently exceptional. So we can see market just thrust through the 1926 resistance, some targets that we have on a daily and weekly chart, and is coming to the next major area that we have specified. As you can see, this is 1618 extension of this butterfly that we have here, right? And XOP on a daily chart. So this is important. Here's, by the way, maybe might be the 127 extension of the really big butterfly pattern, right? So you can see around 1978 we have also 107 extension of this large butterfly pattern. And just to remind you, as we discussed in our weekly report, 1966 is the yearly pivot resistance one. So that will be a really important moment. If market breaks the yearly pivot resistance one, be prepared for a new long-term bullish trend on the gold. And in general, as you understand, geopolitical situation fits to this scenario very well. So currently, guys, if you haven't taken the position, well, it might be a really difficult decision, because as you can see, the technical analysis currently is partially applicable, so it can't be just used as usual when the market is drawing by its own factors, because we have direct and external factor impact on the markets. But from the technical point of view, here is a strong enough level that might trigger some pullback, especially if market has passed through the resistance 1926 without any response. So from that standpoint, retracement here might happen, but many things will depend on the response of the United States. It's a really tricky moment, because it's a really big responsibility stands upon the Joe Biden, is just because, well, it could make the decision on a more wider military conflict in Eastern Europe, so it could involve some countries such as Poland, for instance, Baltic countries. It's also possible, at least the United States have this option to use them, or reaction will be limited by the sanctions. But sanctions, it will be a bit poor decision, is just because, well, it will be weak response. And probably it will be not very good from the domestic political position of the Democrats in general. That's why it's very important what Joe Biden will tell today in the comments on the current situation, how United States responds on this, what we have in Ukraine. But in general, whatever it will happen, anyway, markets still be somewhere under impact of the uncertainty at first moment and exceptional risk, which should keep the demand for the gold at the surface. So if even we will not have some direct thrusting acceleration above this area, market hardly will show very deep retracement. So I'm not sure that people are ready right now to sell gold. Well, that's why from that standpoint, in general, even slow down on the pullback that could let us maybe to add more to the bullish positions. I think that it's too early still to speak about some end of this rally and easing of the situation. So in general, everything is going with our geopolitical scenario. We said that these tensions will stand for a long time. It's just because on the background stands really big geopolitical targets. This is not about the Ukraine. This is really domination in the world, I would say, maybe in Europe at least. So with these bets on the table, such a conflict can't be resolved just within a couple of sessions and a couple of months even. So that's in general few moments on the gold market. So here in the short term, as a bottom line, we are waiting for reaching mainly target around 1950, 1960, watching for response of the job buying and see what will happen next. Speaking on the levels on the 4-hour frame chart, here's some few levels that we could keep an eye on. If the pullback starts, I suppose that it might be even not to the 19 even area. More probable it will be somewhere in an area between the 1916 and 1925. So this is an area that more probable to be like the support, just because here is this respected strong resistance area that we've got, and 1916 is a broken top. In the current circumstances, well, I do not see really big chances that gold drop back below the 1916 top. So that's what we have currently on the gold. Let's keep watching.